Who can start? Yeah. I don't know. Shall we start? Ladies and gentlemen, let's start, otherwise we'll be here all day. I'm going to break with tradition. First of all, I'm going to stand up, because I just find that easier. And you'll be glad to know that we've only got really half an hour, because I know that the most important thing is lunch. And you've got to be... I've got to let you go in time for have a proper lunch and a proper networking session. My name is Jeremy Denton-Clark. I'm chairman of a company called GBRW. What we do is restructure banks. We started 25 years ago in Poland, and just looking at my CV, I suddenly find I was in the Ukraine 20 years ago. Having worked in quite a lot of banks, quite a number of them are no longer with us, and things have moved on and changed. I was hoping Mr. Tanaka was here because he was claiming that the Ukraine is a world leader in NPLs. Not so. Last month I was in Greece with one of the 4 remaining state banks, and I can pretty much assure you that their situation is reasonably desperate. And they've all been nationalized, as you probably know, and are all struggling with a huge level of non-performing loans. Now, this is the banking session. We've already raised in previous sessions all sorts of interesting topics. You've got here with me now 4 very senior bankers. We have directly on my left, on my right, Mr. Mylovanov, Deputy Chairman of the National Bank of Ukraine, and I see Honorary President of the Kyiv School of Economics. Next to him is Mr. Artem Shevalev, who's on the board of the EBRD representing the Ukraine, and is also, I understand, on the board of supervision, if not the chairman, of a number of smaller Ukrainian banks. Next to him is Oleksandr McWhorter, who's chairman of the management board of Citibank Ukraine. And the interesting thing is that he's been in London for 6 years and has only been in the Ukraine for 4 months. So I'm looking for him to bring an international perspective and a view as to how he sees things on that basis. And finally, I have Oleksandr Buglak, who is the head of the financial institutions at Oschadbank. So to keep things moving as quickly as we can I ask for Mr. Mylovanov just to give us a little bit of the background in regard to the current situation of the Ukrainian banking system. You don't have to stand up. You do whatever's comfortable.
Thank you very much. It's my privilege to speak. I'm on the Council of the National Bank and will speak from the perspective of the bank. Currently, many of you, if not most, know that over the last several years, the Ukrainian banking system has undergone substantive transformation, with about half of the banking system being shut down, and the assets are still in resolution process. However, the situation might be a little bit more positive than it might appear. The common facts, or the common kind of wisdom, is that there's a large number of NPLs. There is liquidity in the banking system, but there is no credit. And there is a large share of the state-owned banks. And these are 3 facts which are sort of potentially problematic, or something which we can say fundamentally describe the current state of affairs in the banking system. The National Bank of Ukraine has conducted stress tests this year in April, and the results were released recently publicly. So we have some worst-case scenario recommendations for several banks. Only 8 banks have to do something, and they have to add the capital in the total amount of about 8 banks in the total amount of 6 billion hryvnias, which is not much for the banking system. And in the worst case scenario, by 2019, about 13 banks have to restructure the amount of assets in the volume of about 40 billion hryvnias. So in that sense, the stress testing today shows that the banking system is in much better condition than it was previously. When it comes to lending, it is true that there is a relatively high share of NPLs. However, if you look at the trusted creditors, those creditors with which banks work and those with which there are no serious issues, the amount of credit across the system grows 20% year to year, which is a positive sign as well. With the state-owned banks, there is a law which should be signed by the president about the corporate governance. And there is a strategy. The strategy includes some banks will have to be privatized, others would focus their function on specific segments, but fundamentally the focus will be on corporate governance of the banks. So in that sense, a lot has changed in the banking system, and the banking system is in much better shape than it was previously. Now, before the 2013-2014 crisis, the amount of credit which was available to the Ukrainian economy, to the real sector, was on par with comparable countries of the same amount of income and GDP per capita. After the crisis, it's about 20% less, and it is recovering. However, if we talk about real sectors, the largest productivity growth we experience in IT and high tech. And this is where credit is almost non-existent. Those companies are not, they are not capitalized. And I think there are major opportunities for those companies. Well, let me rephrase it. We do have evidence on productivity growth in Ukraine that it is negatively correlated with the amount of capital. So manufacturing, for instance, those companies which are larger and are better, have better access to credit, their productivity growth over the last 15 years is smaller. So there's something going on, and perhaps something with property rights or something structural, that the human capital flows into the industries in Ukraine and productivity grows in the industries which are not capital intensive. So I think that's an opportunity to think about the structural change which can happen in the economy and would boost the growth where the capital will be used more effectively, where the human capital is. So that's going a little bit away from the banking system, but thinking about how it can interact with the real sector in the future. So there's definitely sectors with high productivity growth which do not use capital. And the question is, we need to identify why, and IT and agriculture to an extent, but IT, first of all, are the largest candidates for that. That would be my short.
Well, thank you very much. Thank you for keeping it short. Artem, how would you like to add to that?
Well, that's probably the way I would look at it is from something that's much closer to my heart, which is the situation in the Ukrainian banking system from the state bank's point of view. Unfortunately, following the nationalization of the biggest bank in the country, Privat, at the end of 2016, the state is the happy owner of a vast majority of the banking system in the country. By different metric, it's from 50 to 60 or even 65% of the Ukrainian banking is controlled by the state. Everybody, including most importantly the state, admits that it's definitely not a healthy situation, and this is a disbalance that has to be corrected sooner rather than later. Something that Tymofiy was talking about, the state banking strategy that was first approved in 2016, then reapproved earlier this year, is rather explicit in the government's commitment to privatizing, to bringing down the share of the state in the banking sector. Jason was talking earlier today about the Ukrgazbank getting ready for an IFC pre-privatization transaction, hopefully bringing full-fledged privatization late in 2019. The Privat Bank, the biggest bank in the system, is also on track for a privatization, but that probably will take longer, till about 2023. Still, the midterm agenda for the government and for all the stakeholders, including the IFIs, which is rather important, is to make sure that this state is not an important player in the banking within the next 5 years. However, we have to live through these 5 years, and we need to make sure that this behemoth of a state banking chunk is functional and is ready to support the economic recovery in the country. That's where the whole corporate governance reform kicked in. Again, something that was mentioned in the previous panels. Ukrgazbank has been the first one to go with the independently controlled supervisory board. We now have, well, again, for the last 2 years, we've had the Privatbank that has been run in a proper, international, transparent, corporate governance standard manner. We hope that with the signing of the new law, the other two state-owned banks, Oschad and Exim, will also switch to the new corporate governance practices. And this is not just a nice thing to present to our international partners in the conferences like that. This is actually something that allows to, first of all, to look at the current operations and going forward from a very transparent, very efficient manner. But most importantly, it would also allow to deal with the problems of the past in a very different and actually proper way. And this is something we were just talking to Oleksandr before the start of this session, NPLs. And the word has been said today probably as often as corruption. State-owned banks in Ukraine have been traditionally abused since the inception of the banks and inception of the country. It's the politically, administratively influenced lending that landed us in a situation when the banks sit on huge piles of non-performing debt, and until this is sorted out, they will not be able to have a massive lending program to support the real sector and the growth of the real sector. At the same time, we all know that dealing with these things in Ukraine is hugely challenging. One of the factors to this challenge is, of course, the situation with law enforcement, the situation with judiciary. When the banks, and to be fair, this also covers private banks, are very limited in how efficiently they can deal with their bad debt. You go to a court and the judge goes into a nice little room, considers all the options, and then comes back and says, no, you have no right for the pledge. You have no right for the loan, and actually he doesn't even owe you anything. Why? This is the judge's decision. Of course, ultimately, very likely you would prevail as a lender, but it'll take you a couple of years and God knows how much in legal expenses to get to the very top of the legal chain and get the decision. We are seeing subtle changes in this respect. And again, this is a discussion that I loved between Adrian and Francis in the previous session on the whole rule of law thing and judiciary. We, within our limited remit of banking sector, we are trying to make sure that the quality of documentation, that the quality of our interaction with the judiciary allows us to build up the base for proper decisions, to make sure that the creditor rights are seen as protected, that the banks do get healthier balance sheets. And again, rule of law, we can discuss this at length. But let me then probably try and flip it into more positive territory. We are dealing with issues that have been identified. There's nothing in the closet. There's nothing under the surface. It's all out there. And the vast majority of the problems, historical problems, legacy problems, are within the state banks. At the same time, the banking sector as such in Ukraine is probably one of the most interesting from the investment point of view. The level of penetration of banking services in Ukraine is barely half of that of its peers. You look at Poland, you look at Czech Republic, you look at Slovakia, the banks cover much bigger part of the economy. That spells out one simple thing. There is a lot of value for an investor coming into the Ukrainian banking sector or in the Ukrainian financial services sector. We are at a point where the overall economic growth will mean a rapidly growing demand for credit resources. As I said, the Ukrainian banks, the state banking, the private sector banks are there to provide this initial financing, but significantly bigger investment is definitely required and is definitely a place to look at.
Thank you very much indeed. Now, Oleksandr, what's the view from Oschadbank?
Well, certainly I fully subscribe to what Artem was telling about the changes and reforms which are needed for the state banking sector in terms of corporate governance, and we do also expect this law to be signed. I think in the short term, however, it's a kind of objective situation that the country appeared in, that the state banks are dominating the market, and that opportunity has to be used by the state, obviously, to lay the right trends and actually support the sectors such as state companies, such as municipalities, renewables, whatever, which is SMEs, which is, for instance, in renewables, you wouldn't see a lot of private or foreign-owned banks actively participating. So there are three leaders, I think, including us two, sitting here, state banks who actively engage in renewables financing. And I think the reason is because state banks, firstly, they have experience. Like, for instance, Oschad was working in the energy sector for a very long period. We know the legislation very well, and it needs to be because otherwise you wouldn't structure the financing and the project adequately. We have the funding, so far at least. Now on, it will be a different story, of course. We need to attract more. But we also believe in the undertakings of the state, which is important in terms of green financing, because the tariffs are actually the thing that allows to finance this project and get a good repayment profile. And there were cases when they were revised for certain investors, and that's an issue, but it's questionable and I think challenging in the courts. So, but in the worst case scenarios, that would extend the repayment period of these facilities for 10 to 12 years from 7 years originally planned. So in such projects, usually in our experience, and we have roughly 70% wind power, 30% solar energy, because now it's very trendy in Ukraine. Every businessman wants to have its solar plant. And very few, maybe 3 to 5% in the portfolio are biogas and small hydro stations, because they require more time for construction, 1.5 to 2 years, and the cost of megawatt is higher than in solar and wind. And yeah, we are ready for continuing this further on with the other banks in a consortium, so on a standalone basis, but of course we need to be supported by funding. And that comes to the question of IFI's cooperation and IFI supported programs that are active in Ukraine. And if you look at our case, for the audience, it would give probably a picture of what IFIs are doing. We have the large program with European Investment Bank, 220 million euro, and we fully drawn up this facility, and we are using it for SMEs financing mostly, but also some for corporate lending in a priority sphere such as renewables. And the beauty of this line is that it's long-term funding. It's up to 10 years actually, when even our own credit policy is up to 7 years. So, and with the cost of 4% in euro, which is public information, then we really can afford to finance long-term project in the country. But of course the requirements are quite strict and you need to fulfill them, both the bank and the customer, but still the opportunity exists. Then we have a smaller one from German Ukrainian fund, and its attractiveness is that a portion is provided in hryvnia. And that is a big issue because for SMEs you wouldn't be able to grant loans in foreign currency. IFIs or foreign lenders, they can only provide you foreign currency. This is one small example, and we hope that they will continue to happen among IFIs in the future. And we are now in discussion with the EBRD of some new facilities. One of them will hopefully have the element of hryvnia financing, some synthetic hryvnia, but still that would allow the bank, our bank, not to take the devaluation risk on our books. And thirdly, we have also an interesting new facility with the European Investment Fund, which is administered like an agent for European Investment Bank, and they provide guarantee for the risk under SME loans that the bank generates for 70% of each exposure. And that allows the bank to take some of the projects, to finance some of clients which wouldn't be able to get this financing because, for instance, they are short of collateral. And in such a case, we have the AAA guarantee from the IFI. So just completing, I see.
When I ran a bank, we had a system of flags. If during a meeting somebody was talking too long, one flag went down. If it persisted, then 2 flags went down. And on 3 flags, we called security. Alexander, you're the new guy on the block. How do you find things?
First of all, on a personal level, I mean, 2 years ago, I did not know much about Ukraine. And so, the last years, I've gotten involved with this opportunity and relocated my family about 4 months ago. For those of you who haven't been, I would highly recommend you go, whether on holiday or talk to me if you're thinking about moving. I mean, the people are incredibly friendly. The city is beautiful. The history there is incredible, and I haven't had a bad meal yet. So I need to find a good gym, though. I haven't looked yet. But from a professional point of view, I think a lot of what's been talked about today is sort of spot on. I think the country has been. When you take a step back and think about all the reforms and all the changes that have taken place over the past 4 years, it's pretty impressive. I think the press and the media tends to focus on there's more to do, which is absolutely the case, and something that we need to continue to have that sort of pressure on. But there has been substantial progress. I think the banking sector is actually one of the real success stories. Again, it's a work in progress, but I think I've been incredibly impressed by the NBU in a time when we're seeing increased pressure on central bank independence. They've shown that they are independent. They have been assertive in tackling inflation, and some of the regulations that they are trying to put out and try to force through are carbon copies of the stuff that I'd worked on with the PRA or the ECB in my sort of prior lives. So they're bringing Western-style banking to Ukraine. And they're doing it in short order. I think if you think that Basel III has had sort of a, probably about a 10-year transition period for the globe, I think Ukraine's trying to do it in 3 or 4 years and sort of play catch-up, which is aggressive. And banks that had the 10 years in the rest of the world are still struggling with it. So these things take time, and I think it's important to recognize that, and the progress is really important. I think the state-owned banks, they have tackled those that were assertive in privatizing them and dealing with some of the issues. I think it's important that the road to privatization does continue. We, as a private bank, want strong Ukrainian banks, both as partners and to support the overall economy. So I think we want to see that going. But I think the NBU is definitely one of the bright spots. I think spinning to sort of my firm, so Citi has been in Ukraine for 20 years. We had our big anniversary celebration this year, so good time for me to come to a big party. And you know, it's been a very successful franchise for us. We have about 150 professionals on the ground in Kyiv. We're the only American bank on the ground there, and it's been an investment that we're very glad we've made. It's been an important part of our franchise for both our clients and for us. And you know, we're viewing things very much with the next 20, 40 years in mind as we think about our positioning for this franchise. I think from the foreign bank perspective, you know, there are, you know, most of the banking sector is state-dominated. There are no British banks on the ground. We're the only American bank, but there are a number of our European peers that are on the ground as well. Some of them have retail footprints. Citi doesn't. We tend to focus on more the multinationals and the large Ukrainian corporates, you know, which has you know, been our sort of target market. But you know, we are there. We are you know, working closely with the Ministry of Finance, with the NBU, to try and help bring the banking sector forward. I think, generally speaking, the constraints on lending are real. I think one of the real challenges has been around, you know, the high rate environment, which makes it very expensive, particularly as you go out in tenor. But you know, it has to be done to deal with some of the inflation. And with the country ratings, the Basel returns to take long-term risk get somewhat challenging for institutions that are subject to those global rules, which is why we tend to partner with the IFIs, with the EBRDs, with the IFCs, OPICs, and others who can take a bit more of that tenor risk to finance long-term investment. And you know, we can partner with them to structure deals and facilitate this investment. And they also provide an upgrade to the credit rating, as Oleksandr referenced, so that enables us to make it work for us. So I think, you know, it's for us one of the real positive trends is you know, we are seeing continued reform on both the legislative side. The new rules on currency, while we're waiting on the details from the NBU, hopefully next month or so. You know, we think this will open up more increased hedging opportunities for investors. This will alleviate some of the pain points in terms of capital flowing in and out of the country, which will really facilitate it. And some of the other rules around the nominee concept and a few other things will really facilitate financial inflows and financial investors into the countries in ways that have been prohibitively challenging in the past. And so we hope that this will you know, unlock some investment capacity into the country, which then we can help recycle into the real economy through our clients. So I think we're definitely bullish on Ukraine at the moment and looking to do more. And I think it's been a very positive experience for Citi, and it's an important part of our sort of global franchise.
Thank you, guys. Thank you for keeping it short. So I've probably got time for a couple of questions. But as I'm the moderator, I'm going to ask the first question. What is your outlook or thoughts for domestic interest rates in 2019? Where are they going? What might happen? Is that possible to say anything of particular interest?
No comment.
That's the guy who has to comment. He has no comment.
No. You're honest friends. You don't have to.
Yeah.
You don't have to.
It's worthwhile to show the couple of slides that we
Oh, I think it's going to work?
prepared on this subject too.
Oh,
That's
there
an
you go.
illustration of the rates development during the several-year period. So as you see, they were steadily coming down from middle 2015. And now, unfortunately, they are on the rise, and that's both in deposits and lending. And this is the policy rate and T-bills rates, which you see. So really, but we know all the reasons of such development of the rates recently, because everyone is still waiting for the IMF to approve the lending, and the central bank has to fight against the situation with its own means. For the next year, subject to hopefully soon approval of the program, I believe that the situation will revise.
Thank you.
Because inflation is planned at 11% this year, the inflation. So it's not worthwhile to probably keep the rate so high.
I think there is an important thing to highlight. There is a huge gap between the hryvnia and FX interest rates in Ukraine. Of course, the problem with lending in FX that you are taking FX risk, so there are very few companies that are willing to borrow in dollars or euros, renewables being one of them because they're charging their tariff in euro cents. But overall, this just shows the FX rates came down in the last 4 years from probably low double digits to around 5 to 6% for a euro denominated loan. Hryvnia, unfortunately, is still up there, but there is a very solid natural floor to that, and that's why I was trying to entice Tymofiy to comment. This is the NBU key rate. The banks will not lend cheaper than, what's it now, 18%. Why would they if they can put the money at 18% with the NBU and just make a nice return there, which is essentially with a AAA borrower in the NBU. The market appreciates and understands why the NBU had to be so hawkish when it comes to the key rate, but this is a very natural constraint to lower rates, regardless of the reasons for that. We may argue that there are other issues. Basically, the risk has to be valid because of these things that I've mentioned, the rule of law, the difficulty with collecting collateral and enforcing court decisions for the banks. But this comes secondary. Whilst there is an overall high interest rate environment, there's very little that could be done in terms of bringing down the cost of hryvnia funding to Ukrainian borrowers.
Now, can I comment?
Of course.
Well, so I think the policy, the monetary policy of the central bank is predictable with this board and with this council. If the board and the council change, there might be changes in the policy. There is some demand in the country for fiscal stimulus, including through cheap credit. And of course, there will be pressure for that from all kinds of areas. And some politicians and some technocrats support that. So the central bank will resist, the current composition of the central bank will resist that. The problem with fiscal stimulus and primarily proposed through cheap credit, and we hear it also on this panel, to some kind of ideas of the priority sectors and the expensiveness of the interest rates, and is that who is going to be the decision maker on the allocation of this priority? With large state-owned banks, and historically Ukraine has not been very successful in employing fiscal stimulus to support the most productive rather than captured industries. So there are dangers of that type, that there will be more distortions than the benefit. Anyway, in any case, those issues have to be addressed. Who's going to be financing it, and who will be determining the priorities and which vehicles will be used, and the central bank will try to not be engaged in that and maintain the sound monetary policy. The rates are up because expectations are up, inflation expectations, a forward-looking policy. So, we can, of course, keep the rates low now with the consequences of having even worse consequences in the future, so it's not a static situation. The IMF conditions are critical here. Everyone knows what needs to be done, and that's not being done. So who is there to blame? Just get it done. Okay, and open financing for the country. But I'm not in the position to speak more openly about what I personally think as an economist, rather than the member of the Council of the Central Bank. Except that I want to point out that hopes that miraculously judicial system will be cleaned up in the next year or 2 or 3. They are naive at best. In the best case scenario, it will take years, if not decades, for judicial system to start being sound. But NPLs and credit, it's really about relationship. When the banks make decisions whether the relationship with the real sector is profitable, and when someone decides not to give back the funds, it's not really because they're afraid or not afraid of the court, but because they see that there are opportunities. If there were business opportunities that they would need to continue to interact with the bank to finance future opportunities, they would continue even without the judicial system. At least that's an economist in me speaking, not a banker. I understand that you might have a different perspective, but from perspective of the economist, it's a relationship. You're making a value decision. Is it more valuable for you to screw this specific bank and then not get credit tomorrow, or do you still need credit to invest into something? And so it's really about projects which are available there. Now, projects, there are risks. One is exchange risks that many people ask. So an exchange risk is coming from what? From the same issues, right? For why there is tight monetary policy today. Just get things done, get the IMF through and minimize those risks. So exchange risk is coming from that, right? Partly. Then on the question of how expensive the interest rates are, how high are they? Historically actually quite low, real interest rates, if you compare the history of Ukraine. I'm not saying we're in a developed country with the developed financial system. We're in a developing country with high risks. With Russia next to, there are risks. There are captured industries, vested interests. There are risks. And for those risks, historically, if you take the real interest rate, they are the lowest in the history. Right? So it is great to give a static perspective that it's high. Of course, it's always going to be high. I always want cheaper credit. Okay, so and then another risk is, if we are talking about alternative energy, is that the profitability there is driven by regulation, right, by the rates. So there are risks, political risks about these rates being maintained or not, so that has to be secured. So there should be more securing of the conditions for the investors, at which so uncertainty has to be removed. That there is commitment on the part of the government or the economy or the entire regulatory system that to maintain the same conditions at which the investors are entering into the projects. And that would help too to reduce the frictions and decrease the cost of capital. So this is some comments on that.
Thank you very much. Guys, do you want to add anything to that? Okay. Right, I think we're almost done. Is anybody absolutely bursting with a question, or can it be taken and asked the panelists at lunch? Oh, as promised, well, a little bit over, but thank you very much indeed, and thank you to our panelists. Right.